Hey everyone, welcome back to Corporate Decoder. Today, Deep Isolation Nuclear Incorporated just filed its 8K, and it looks like a critical shareholder meeting took place. Quick note, this is not financial advice, just my take on public filings for educational purposes. We'll dive into what the company's shareholders voted on, and more importantly, the implications of these votes. This filing is from Deep Isolation Nuclear Incorporated. They are a Delaware incorporated company, which is pretty standard for many public businesses. You can see their commission file number if you need to track them, and their IRS employer identification number, which is like a company's social security number. They have their principal executive offices in Berkeley, California, and their phone number is listed there as well. The form here is an 8K. Think of an 8K as an unscheduled or special events report. Companies have to file these when something big happens that shareholders need to know about right away, rather than waiting for their regular quarterly or annual reports. This particular 8K is about the matters that were voted on at their annual meeting of stockholders. The date of this report is the 17th of June 2026, and the earliest event reported happened on the 16th of June 2026. That is when Deep Isolation Nuclear Incorporated held its 2026 annual meeting of stockholders. This meeting is where the real decisions happen. It is interesting to note that the company checks the box for being an emerging growth company. This means they are a relatively new public company, and they get to follow some different, often simpler, rules for reporting to the SEC if they elect to. They can also delay adopting new accounting standards, which can give them more time to get ready. The main point of this filing is item 5.07, which covers how matters were submitted to a vote of security holders. Essentially, this is where we find out what the shareholders voted on and how they voted. To have a vote, you need a record of who the shareholders are and how many shares they own. The record date for this meeting was the 24th of April, 2026. On that date, there were over 57.6 million shares of common stock outstanding. Each share typically gets one vote. Now, for a vote to be valid, a certain percentage of shareholders need to be present, either in person or by sending in their proxy votes. This is called a quorum, and it ensures that the decisions made reflect a significant portion of the owners. At this meeting, about 60.13% of the voting shares were represented. That is over 34.6 million shares. This percentage is important because it means the meeting was valid and they could conduct business. A quorum is crucial for any corporate decisions to be legally binding. The first item on the agenda was to elect 3 Class A directors. These directors will serve until the annual meeting in 2029, which is a 3-year term. Directors are the people who guide the company's strategy and oversee management. Having experienced and trustworthy directors is vital for a company's long-term success. Here is how the voting went for the directors. Rod Balzer, Renee Hornbaker, and Krista Steele were all elected. They each received the full amount of represented votes, 346,34562 votes, with 0 withheld. This shows strong support for these individuals in many companies. Directors are elected by a plurality, meaning they just need more votes than anyone else, or in this case, a majority of the votes cast. Since there were no votes against, they sailed through. Next up was a vote to ratify the selection of CBE CPAs, PC as the company's independent auditing firm for the year ending the 31st of December, 2026. Independent auditors are crucial for providing an objective opinion on the company's financial statements. Ensuring they are presented fairly and accurately, this builds trust with investors. And again, a resounding victory here. All 34,634,562 represented votes were cast in favor of keeping CBIs. PC, there were no votes against and no abstentions. This indicates that the shareholders are comfortable with the auditors chosen to review the company's books. This proposal is often called a say on pay vote. It is an advisory vote, meaning shareholders get to voice their opinion on how the company's top executives are paid, but the board of directors doesn't have to follow it. However, a strong vote against compensation can send a powerful message. High executive pay can be a sensitive issue, especially if the company's performance doesn't seem to justify it. Here we see a split. The majority of votes were in favor, with over 33.7 million votes for executive compensation. However, there were a notable number of votes against, over 763,000, and over 133,000 abstentions. While the proposal was approved, the votes against suggest that some shareholders are not entirely happy with how the executives are being compensated relative to the company's performance. This is something the board should definitely pay attention to. This is an interesting one. Shareholders were asked to vote on how often they should have this advisory vote on executive compensation. They could choose between 1 year, 2 years, or 3 years. This vote helps the board understand shareholder preferences on how frequently they want to weigh in on executive pay. The clear winner here is a 1-year frequency with over 30.3 million votes. This means shareholders want to have their say on executive compensation every year. The 2-year option got very few votes, and the 3-year option got over 1 million votes, but not nearly as many as the 1-year choice. The abstentions here, over 3.2 million, could represent shareholders who either didn't care or felt their vote wouldn't make a difference for this particular question. The overwhelming preference for annual votes shows shareholders want to stay involved in reviewing executive pay regularly. Finally, the report is signed by Rodney Bolzer, who is listed as the President and Chief Executive Officer. This signature authenticates the report and confirms that the company is officially submitting this information to the CC looking at these votes. The election of directors and the approval of the auditors show strong shareholder confidence. However, the advisory vote on executive compensation, with a significant number of against votes and abstentions, suggests a potential disconnect or concern among some shareholders regarding pay. The clear preference for annual say on pay votes also highlights a desire for ongoing oversight. This isn't a company that is in immediate crisis based on this filing alone, but the executive compensation results are a signal to watch. The company's direction hinges on how effectively they address shareholder concerns while continuing to manage their business, especially in the energy sector, which can be quite sensitive. The risk I am watching is whether this executive compensation sentiment could lead to broader dissatisfaction or activism down the line if performance doesn't align with pay. My biggest concern is if the company is truly listening to shareholder feedback on compensation. What I am actually looking for is how management responds to the split vote on executive pay in future communications. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this helpful, please like this video, subscribe, and join our Discord.